Is Qualcomm the next NVIDIA? In this video, I'm going to talk about Qualcomm's entry into on-device AI. I'm going to talk about some of its financials, and finally I'll do a valuation to determine whether $129 current price is an entry point for Qualcomm stock. So why are we even comparing Qualcomm with NVIDIA? That's because Qualcomm and Meta collaborated to bring on-device AI with Llama 2 model. Llama 2 is a large language model developed by Meta, and Qualcomm and Meta are joining hands to optimize the execution of Meta's Llama 2 large language models directly on device, eliminating the need for heavy reliance on cloud services. By running generative AI models like Llama 2 on smartphones, PCs, headsets, and vehicles, developers can offer users more private, reliable, and personalized experiences while saving on cloud costs. This is definitely interesting, but it seems more like a B2C model, and we'll have to wait the next few quarters to see how Meta and Qualcomm are going to monetize this and how developers can leverage this on-device AI to develop applications that can be monetized. Let's quickly look at Qualcomm's financials, and in doing so, I will also cover their business model. As you can see on the screen, the stock price currently is about $129 with a market cap of about $144 billion. So this is a very large company. For the past 12 months, the revenue is about $41 billion. So that's a price to sales of 3, which is good. The net income is about $10 billion for the past 12 months. So that's a PE ratio of 13.89, and the forward PE is more than the current PE ratio. Forward PE is about 15.16. It means that a lot of people are expecting that the revenue and the net income are going to decelerate in the coming quarters. And Qualcomm also pays a healthy dividend of 2.47%. That's about $3.2 per share. Now let's look at past stock performance. As you can see on the screen, Qualcomm hit about $88 back in December 1999. And even 20 years later, that is December of 2020, it still stayed under $100. It means that the Qualcomm investors did not get any gain in 20 years. And all of a sudden, right before the pandemic, the stock has doubled. And we can see why that happened, because for the past 15 to 20 years until 2020, the revenue was pretty much flat, or it was wavering between $20 to $25 billion. So there was not a significant growth. And during the pandemic back in 2021, their revenue jumped by almost 50%, as you can see on the screen, and it continued to increase even in 2022. This was due to a lot of people staying at home, and there was a lot of demand for devices, and Qualcomm, as we know, supplies chips for these devices, and therefore they have made a lot of revenue there. But now look at the 2023 trend. I just plotted that red bar there. The revenue is actually decreasing, and it is expected that they could get to $36 billion. That's pretty much same as their 2021 revenue, but the question now is, can they even keep this revenue going forward, or will they go back to the 2020 and prior level of $20 to $25 billion? So that's a huge question in mind for a lot of investors. Let's look at the past 2-quarter performance. The revenue has decelerated on an average by about 14%, and operating expenses also increased compared to the quarters prior, and the net income also reduced. As you can see, the net income growth is negative 34% and negative 42% respectively. So this company's net income is reducing significantly, and the revenue growth is also reducing significantly. Let's look at the most recent quarter results. They made about $9.3 billion of revenue, which represents negative 17% year-over-year growth. So that's significant deceleration, high teen deceleration in revenue. And within this 9.3 billion, as you can see on the screen, they have 2 different revenue segments. One is QCT, which is Qualcomm CDMA Technologies, which made almost $7.9 billion. And they have QTL, which is Qualcomm Technology Licensing Business, which made about $1.3 billion. So you can see that almost 85% of the revenue comes from the QCT, and rest of the 15% come from the QTL. The bottom right corner of the screen, you can see that Qualcomm has returned about $1.7 billion to stockholders. Remember that Qualcomm is a profitable company. So almost $0.9 billion was spent on share repurchases, and rest of the $0.8 billion was spent on paying these dividends. As I said before, 85% of the revenue comes from QCT, which is Qualcomm CDMA technologies, right? So let's look at what's happening within that revenue segment. As you can see on the screen, out of the $7.9 billion they made in QCT, almost $6 billion is made from the handsets. We know that they make the Snapdragon chips for Samsung, Vivo, Oppo, OnePlus, Honor, Motorola, Asus, and ZTE. Automotive revenue is very insignificant at the moment, $447 million compared to their overall revenue. And they're partnering with Mercedes-Benz, but we have to see how this is going to grow in the coming future, because the handset revenue pretty much is going to stay flat, or it can increase by low teen percentage, because once the devices demand go back in China, then they can make a little bit more revenue, but it's not going to be a significant growth driver for Qualcomm. The automotive revenue will have to grow significantly because it's only $447 million at the moment. And there's also Internet of Things, which made about $1.4 billion. Qualcomm currently is expecting that the automotive and Internet of Things revenue is going to accelerate in the coming quarters. And for the handsets, even if they get to low teen percentage growth, that's still a huge win because the devices market is pretty much saturated. Now let's look at their forward guidance. Is it any good? No, it's not, because they're only saying they can get to $8.1 to $8.9 billion of revenue in the next quarter. And even if they achieve the $8.9 billion of revenue, that is still a reduction of minus 22% year over year. So this company is losing its revenue significantly. Before I move on to the valuation, let me show some key announcements made by Qualcomm that could potentially lead to a double-digit growth in the coming quarters or years. The first one is that they have an industry leading on AI on-device performance. As you can see on the screen, they're saying that they have modeled world's first on-device demonstration of Stable Diffusion on an Android phone. Stable Diffusion is an algorithm that is text to image. If you type in some text, it's going to convert into an image. As you can see on the screen on the right, somebody typed super cute fluffy cat warrior in armor, and it has generated a picture. This is a text to picture, right? So 1 billion plus parameter generative AI model runs efficiently and interactively on the Android smartphone. And this is what I was talking about before, the partnership with Meta, where developers can develop apps to leverage this generative AI using Qualcomm's hardware and can potentially monetize. But we do not know how much of that will come into fruition, but it's still something that we can look forward to. They also made some announcement for the QCT automotive. They said they have developed automotive modem RF system, and we do know they have partnership with Mercedes, but we have to see how much that's going to contribute to the revenue growth in the automotive sector. And Qualcomm also announced industrial IoT products, and again we have to see how much of this is going to convert into the Internet of Things revenue growth. When I look at the balance sheet, Qualcomm has close to $6.5 billion of cash equivalents, and marketable securities. So that's a healthy balance sheet. And they're also slowly buying back the stock because they have a lot of net income. They're returning some of it to the shareholders in the form of dividend, but with the rest of the money, they're buying back shares. I would actually prefer them to invest that in R&D and develop some products for future, but they are choosing to buy back the stock, which is still good. Now let's look at the valuation. I'm going to show two cases, one with reasonable assumptions and the other with great execution. As you can see on the screen, in the reasonable assumptions case, in 2023, I'm assuming that they can get to $36 billion of revenue because they are making close to $9 billion a quarter. So that should result in $36 billion. With respect to the estimated revenue growth, I'm assuming 8% year over year for the next 4 years. I think this is reasonable given the fact that in the past 2 quarters, their revenue actually decelerated on an average by 14%. And in the next quarter, even if they get to the highest guidance, that would still be negative 22% revenue growth. So it's going to take some time for Qualcomm to get back to revenue growth mode, and the drivers for this revenue growth would be their IoT and automotive sector. With this high single digit revenue growth, they can get to close to $49 billion of revenue in 2027. The net profit margin has been wavering between 17 and 25% for Qualcomm, but I think 20% is reasonable. It can make close to $10 billion of net income in 2027. Currently, people are paying close to 13 PE, right? And I'm assuming a multiple of 15 for this company because this is a very established company. The revenue growth is in the high single digits. So I cannot pay much higher multiple than 15. So with 15 multiple, this company would be worth about $146 billion in 2027. Currently, they have close to 1.123 billion outstanding shares. They are buying back shares slowly. When I look at the past 3 years, on average, they bought back about 1.5% year over year. So I'm assuming 1% buyback. With that, they will have 1.068 billion outstanding shares in 2027. When I divide the $146 billion of market cap with 1.068 billion outstanding shares, I get a stock price of $138. Currently, their stock is in the order of $120, right? So that's about 15% gain in 5 years, which is not at all attractive. Of course, they pay close to 2.5% annual dividend. So even if you add that for the next 5 years, that would still result in another 12.5% gain. So we're looking at less than 30% gain, even if you include the dividend in the base case. Now look at the great execution case. I'm assuming estimated growth rate in the low teens, 13% year over year for the next 5 years. They're going to make about $59 billion of revenue in 2027. Remember that this company's revenue growth is decelerating in the double digits, and they're hoping to get more revenue growth in the IoT and automotive sector. Both of them are in the air. We don't know how quickly they can ramp up that revenue to get overall 13% revenue growth year over year. So I think 13% will be a result of great execution. I'm still keeping the net profit margin as 20%. With that, they can make about $12 billion of net income in 2027. I'm going to give it a premium multiple of 20 because if they show us hope that they can again grow in the double digits, I think people are going to pay a higher multiple. So that's 20 multiple. With that, the market cap would be about $234 billion in 2027. I'm assuming a 2% buyback in this case. 2% buyback is not less. If you think about it, this is a huge company with close to $150 billion of market cap. So buying back 2% would require close to $3 billion. And we also know that they already pay close to $3 billion for dividend. And this company barely makes $10 billion of net income. So 2% buyback is a result of great execution in my opinion. With that, the stock price in 2027 would be about $231. Currently, they're in the 120 range, right? So that's about 93% gain in 5 years, which is very attractive. And on top of that, we get to collect 2.5% annual dividend. For 5 years, that's going to add another 12%. So we can easily double our money if we buy Qualcomm stock at $120 a piece. But the problem is, this is the great execution case. A lot of things have to fall in place for this case to come into fruition. Overall, I see about 30% gain in 5 years in the reasonable assumptions case and close to 2x in the great execution case. But when I take an investment decision for my personal journey, I go with the base case where I'm only seeing 30% gain. On the other hand, if you believe in the great execution case that their generative AI bet is going to pay in future and their IoT and automotive sector is going to accelerate their revenue back into the positive double-digit growth, then we're looking at a 2x. So for me, I'm not going to believe in that story. I want to see some more execution. I think Qualcomm has more painful quarters in the coming years. So I will think about this stock if it gets to $100 or below. And until then, I'm going to stay on the sidelines. Let me know your thoughts in the comments. Thank you so much for watching.